Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, June 14th, 2019, and this is the Daily Report for Gold and Silver. What a couple of weeks we have seen in the market, an extremely volatile day today in which we exceeded by slightly a tick the former high of the year and then closed well below it. Nonetheless, we have seen this market on a tear, on a rally since May 30th with one short, shallow correction. This week, of course, had some geopolitical events occur, specifically in the Gulf of Oman, in which two tankers were attacked. Now, what that does next week is something that we'll have to all wait and see. We do have the FOMC meeting coming up. We also have the G20 meeting coming up. So the end of this month promises to be filled with an extremely important set of events that will most certainly influence gold pricing. We are long gold. We'll talk about that in detail as we look at our technical studies. We also just pulled a very nice profit, and we'll talk about that very, very briefly. But first, let's take a look at closing prices for Friday. Traders, as we look at the price board today, we see that gold did close higher on the day by about $1.60, but that is absolutely dwarfed when we compare that to the high today of $13.6220 and the quick speed at which it came down. Nonetheless, we had a slight gain on the day, and we've had a couple of very, very solid weeks. Silver traded lower on the day, breaking back below $15 at $14.85. That's a 4-cent decline. Platinum also lower by about $6.30, $8.03. And lastly, palladium continues to rock the world, up $24.30 at $14.6250. We would be amiss not to talk about the dollar because the dollar strength had such a huge impact today, up almost 0.6%, 97.56. Let's take a look at our charts and technical studies. Traders, we have seen gold trade in a spectacular manner throughout this entire month, as well as the end of last month, May. We have had a total of 2 trades, one which we executed and exited, and one that we are currently in. I want to go over that as well as talk about what my forecast is for the upcoming weeks. First, the first trade that we really put on was in August gold, and it occurred on the 30th day of May. We are looking at a August gold contract, and we can see the candle that we actually went in at was this one right here. And that day, the market was trading at around 1280 and traded to a high of about 1293. You can see that right here. We actually entered towards the close at 1293. We initially put a stop below that price point, but during the following week, we actually raised our stop a total of 3 times. The last time we raised our stop, we raised it right up to this area here, and that was prior to last weekend, a week ago on Friday. Now, what was most interesting is that as the market opened up on Sunday, meaning Monday in Australia, it opened down a couple of dollars, but then quickly dropped down about $8. And so that prompted me to take our stop to the market. That would be this particular area. So we entered a long trade at 1293.10. We got out at 1338. Our profit was $45 per ounce based on a 100-ounce contract. That's $4,500, or a 45% return on that single trade. And traders, that takes us up to our current activity this week, as well as our current trade. As you can see, I have highlighted the different areas of exposure when we entered the trade. The first trade here, when we raised our stop here, we took our stop to the market right in here. And this is the day that we got out. You can see that the market sold off pretty briskly. Now, we remained flat for just a couple of days because on the following day, we made a lower low. But then on the 12th of this week, what we saw was a pretty firming market. And I sent out a trade alert recommending that we initiate long positions in the market. Traders taking that call got in at roughly 13.30 39 right in this area here. Our stop originally was at 33. It is still at 33. The market is now at 45. Now, it had went up a lot more during the day, but as of settlement right now, we're at 1345.30. We are long from 1339 with an active trade. So all in all, it was an exceptional week in terms of profits. The real question becomes, what do we think will happen next week? Where do we see gold trading from here? Now, there's a couple of things that are extremely noteworthy. First of all, I pulled up a Japanese average chart. This is a daily chart. We can see that the current candle is a rather large-bodied candle. It has the absence of a lower wick, but a very, very large upper wick. It's the lower wicks that you want to concern yourself with. The other thing in terms of a bullish slant to this market is that we had this extremely strong rally, took us up to these highs, 1355. A very, very shallow and quick correction. We had our pivotal candle here, and over the last 2 trading days, we have had body size increase and an absence of upper wicks. That tells me that the uptrend still has momentum. It still has strength. That being said, there are a couple of caveats. The first caveat is the way that it sold off after hitting this exaggerated high at 1365. What we find is of most importance when we do that is if we take a look at the recent high that came in February, and let me draw this as straight as I possibly can, you can see that without a question, we have pretty much equaled or taken that price point out. So where's a logical area for resistance? Well, it has to be these highs that came in right here. On the other hand, we can identify a pattern simply called a scouting party. And traders, we've talked about this pattern before, but in essence, what a scouting party is, it's a pattern coined by Steve Nissan. It is not a candlestick pattern, but it is when, in this case, the bullish faction tests the fortitude of the bears. And by that, I mean by pushing the market to these extreme highs. They're trying to see what kind of selling pressure comes into the market. Obviously, some pretty extreme selling pressure because it sold back off and it sold back off hard. Many are attributing this to profit taking. I believe that that is the furthest thing from the truth, because the actual truth of the matter is that gold traded higher today, but the dollar strength took all of that away. So I don't believe it's simply profit taking. My sense is that we need to see an effective close above 1345. When we do that, our next real target or area that we could go to would be around 1355, and I am looking for a challenge of this high price here at 1360. That, of course, is basis August, and it represents when the continuous contract of futures was at 1350, and of course above that is 1370. Traders, we are in unusual times. We are looking at a market that truly is reminiscent of what we used to see back in 2008, 2010. Of course, they were for different reasons, but one of the primary reasons that is the same is an accommodative Fed, lowering interest rates, making money cheap, and trying to really expand on the economic growth that we've seen, and it has slowed down since the trade war. So we'll see how next week opens up. If it has any kind of support, we should take an immediate play for $1,355 per ounce. Traders, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for the next daily update and review. Bye-bye.